Are you one of them that sold USD this week and you're late to realize that professionals had bought this week? I'm going to go through my trading plans for next week and how the professionals are planning for their next week. So let's go. Trading Forex is risky, not a property for everyone. Past performance is not indicative of future results. Whatever's happened in the past doesn't need to happen in the future. And since this is only for education purposes, not financial advice, please don't risk your school fees. Let's make a deal for this video. I'm going to turn off the ads if you leave a comment below and you see this video all the way until the end. Deal? Let's start off with Australian dollar, US dollar. As you can see, this was our trading plan last week, and this is our results. Boom, 100 pips in profit.
Nice.
Congratulations. For the next week, we are continuing an uptrend. We are continuing to look for buys, and if it comes down to support, great, sounds fantastic. If it goes higher, then you look for support again, as we do as trend traders. We might look for take profit at 72.25 or higher. What do you do if this one falls? Well, then you have a stop loss. Well, should you have your stop loss around 76.82? Probably, and that is 47 pips in stop loss. Great, fantastic. Always protect your capital. That is your number one goal. The COT report for Australian shows that there's less shorts, means more bullish, and also adds a bit more longs. You know what? Fantastic. We are also have the hedge funds with us going higher. For EURUSD, this was our trading plan, and this is the current results. You are 96 in profit. Congratulations. What is the next move here? Well, I think we probably should go higher again, right? Coming down to support at around 120.90, going higher, coming back to support, and then going up to 22.00. Is there any problems with this trading plan? Yes, because on the monthly, which is above your head, we have a target of 21.75. Why do you say that? Well, because this was a very strong market down, came down to target too early, then that would set up a trade back up to the central, and that is the end of the trading plan. Whenever you're investing, you always need to protect your capital, so you probably should have stop loss around 20.40. That's up to you to decide. It's only educational. The COT report has quite a lot of extra buys coming into the long side by the hedge funds. Fantastic. A bit more shorts, but overall, great results. For pound, this was our trading plan. And how did it go? 150 pips. Congratulations. If you get even a bit more, maybe 160 pips. The COT for pound this week was more bulls coming in, less shorts coming in. Yes, that is what we wanted to see. Do you know why? Because that just means even more bullishness on the pound. Fantastic. Now, what are you looking for this week, mate? Well, price to come lower, back into the same area, and then go higher. Now up to 139.50 sounds like a great deal to me. Where do you pick your stop loss? Probably below 137.40, below it. And then what do you do next? Well, that is your trading plan. Can this go lower? Yes, it can. Does that matter to me? No, it doesn't. Because I know over time I'm going to be right. So if I'm stopped out now this week, I know I just have to wait for the trend to come back bullish again. Currently, we have a bullish trend. Currently, the fundamentals are with us. And currently, if you sold pound dollar this week,
No! No! No!
And if you want more details, I will be live tomorrow at 19:30 GMT+2. But if you want to have a private live at 4 p.m., you have to become a YouTube member. It's down below the video. £4 yen. This was our trading plan. And this is the results. We currently have 130 pips in profit. Boom. Congratulations. For this week on pound yen, we are looking for prices around 145 and up to 146. Sounds great, don't it? We're still in bullish trend. We still have weakness in the yen, and everything is going great, I would say. Like, what else do you want? So if you sold pound yen this week, please do more research. You might want to join a course or something that would teach you how to do technical analysis, because this price was never bearish. Where do you keep your stop loss, you might ask, mate? Below the previous low, below 144.47. Great. US dollar Canadian. This was our trading plan. That was the results. You might ask, how much was it? Well, 108 pips. Boom. Congratulations. What is this week, you might ask? Well, maybe we should go lower then. Price coming up to resistance, going lower, targeting down to 126 area, and another fantastic week. What are we gonna do next? What if it goes higher? Well, we have stop losses at 27.60 or higher, but not more than 1% of our account. For gold, this was our trading plan. And this was the results. You were maximally up 410 points. Well, generally speaking, for the week, it wasn't too great. But hey, that's what we have planned. And I know my mentorship students, they rocked this one. Now for this next week, I'm going to say that really breaks my heart. The interest in the buying of gold was not where I wanted it to be. There is less buyers coming in, there's more shorts coming in for this past week, and that is really disheartening. So I'm going to say, until I see this number being closer to between 10 to 20,000 plus contracts, I am going to say hold. Don't buy gold. Until then, all my plans from 13th of February is now on pause. Why do I go to so drastic measures to say I'm not going to buy gold? Because 1, it doesn't have the technical trend. 2, it doesn't have the hedge fund managers pushing it higher. 3, I don't want to lose money. I don't want you to lose money. And I'm just saying my personal opinion is this current instrument isn't worthy of your stop losses, of your entries, and your potential profit is now more limited than ever. For USOIL, we said that we should look for buys around 55, coming up to 60. All right. You might say I'm wrong, but I'm saying no, I'm not, because I only want to trade in a situation where I am best off. I'm only best off in the market where it is at support. But if it goes higher high, higher high, higher high, I'm not interested. So we might have got a pullback on 9th. That might have been something to buy because it comes from above, comes down, but it's still very aggressive. So if I'm going to be consistent with my trading, I need to be consistent with my trade planning and consistent with my expectations of the market. When it goes more extreme than I expect, I might lose out, and I'm actually better off then than to take a risky position and lose money. So For this next week on US oil, I'm thinking, okay, you can kind of take it from 58 up to 61, but be aware I have a mental target at 60. We almost hit it on Friday. That might be the end of the bull run. Have that in mind. As higher as you go, the more likely traders are going to be nervous of their profits. Remember, this has gone quite substantial lately. As you can see, we have risen 15% in 13 days. That is substantial. 15% higher prices in oil is a lot. Today, I am going to give you one extra pair, and it is the S&P 500. How am I thinking about S&P 500? I normally want, if I ever get price around these green boxes on the monthly time frame, that is the best time to buy. So currently we are in the monthly take profit zone. We might go higher, but we might also drift into March buy zone. If we come crashing down, it really doesn't bother me, because as you can see in this trend, we have always come down to this box. At some time we've always been there. So even though if it goes higher, I would just wait for it to come back again as a healthy, normal trend. And when it does go too high, too fast, too far away, I don't care. Why don't I care? Because I know I will have another opportunity later on. Alright, that's it for today, guys. I hope you have subscribed. I hope you have liked this video. I hope you got new information that you didn't know from before. And I see you tomorrow at 19:30 GMT+2. If you don't know what that is, give this a subscription and you will be notified.